Hello and welcome to this video. In this video we are going to continue where we left off. We are going to have a look at Bitcoin and we are going to try and better understand why price moves the way it does. And as we mentioned in our previous video, we are going to be talking about the distribution of liquidity, which is ultimately what is driving price. And again, we refer to our auction example where you have the man up front with his hammer, you have the item that is for sale, and the man is jabbering on, shooting out numbers, and it is the active participation of the people in the crowd, the raising of their fingers, that is actually what is moving a price. And so the same thing occurs here. In an auction, if no one is lifting their finger, saying that they are willing to pay a given price for a given item, then the price of the item doesn't change, it stays the same. And the same applies here. Unless we have people that are willing to buy at either higher or lower prices, price is not going to go anywhere. So this is very important. And if you do look at a price chart, of course, as we mentioned in the last video, you can only see what has happened and not what is going to happen. That said, there are some very detailed clues in how price moves that will enable you to make really good trading decisions, and we're going to have a look at those briefly in this video. And I'm going to keep this short again. I'm just going to continue and build upon this methodology throughout the coming videos. Okay, so you can let me remove some of these lines. Okay, that's better. So you can see here we spoke about this area down here. So we had price kind of wriggling higher. It shot up, it came down, it poked into this area, and then it went higher. Why did price leave this area and move higher? Because this is the man in the crowd, the woman in the crowd raising their finger saying, if price comes down to this area of the market here that I'm looking to buy, this is an attractive price for Bitcoin, so I'm going to buy when price gets there. And this price was about 5,700. When price came there, it left like a rocket. Price came back, it came close to the area once again, a few $100s more expensive, and then it went up again. And then you can see here that we seem to have found an area that seems to kind of hold a kind of upper limit for the time being. So people are buying down here and people are getting out of their positions here. And why are people getting out of this position here? Well, you can see that when price kind of formed this this messy piece of price action here, it left very quickly. What does that mean? Well, that means that people were getting out of their positions. You had a lot of people that maybe bought very late in this move. Price started to bleed, so a lot of people are bailing on their positions because they're simply losing money. So price leaves, we leave again. We have a green candle showing us some momentum away from this area, and so people start liquidating their positions. What is the smart money doing? The smart money is buying back at a lower price here. This fair market value, a very nice price, referenced historically, and price is moving up again. So they're buying here and they're getting out here. And if you have a close look, we're going to dig a little deeper here. You can see that price is reacting to these small areas here. You can see how price went down and it went up and it came down. We accumulated for a period here. We accumulated orders to what? To move price lower. And then price kind of wriggled lower. Notice that price came up to this area here. I'm just going to mark off the high. And why this level here? Well, when you have a price structure like this, you want to pay attention to this, because in this little price structure here we have what I refer to as a parent area of supply, and here we have a child area of supply. So price returned to the child, and then it retreated and it left in a real hurry. Here we have the parent. The parent is a supply. The child is a reaction to the supply. And price went up to the upper end of this child area of supply, which is very close to this. And this is where it retraced. And so ultimately, what you need to do is you need to find areas in the market where price moved into and then left quickly. And this you can consider to be an arrow pointing to the beginning of the sell zone for supply or the buy zone for demand. And this is very close to that. You can see that price came very close to the edge of this area of supply, and this is where we saw a big increase in short positions as price moved lower and eventually gapped down. The same thing we have here. Price came down and went up. It's pointing to the edge of the sell zone. price left quickly, we moved higher, we gapped down, and price came up to it very closely. Now we're retreating once again. So where will price go next? Well, this requires you to look at where price has already been and make trading decisions based on that. And that is something we are going to cover in the next video. So if you haven't already done so, please subscribe, and I will see you in the next video. Thanks for watching.